Yo, what's up YouTube? Welcome back to my YouTube channel. So let's get straight back into the video. So this is the second video of the market structure, and I promise to make a new one this week. So in this video, we're talking about advanced market structure. So guys, what's basically advanced market structure is basically what we use, or the terminology that smart money traders use to read inverse, like internal and external market structure, because there are some situations whereby we have a bullish structure in the higher time frame and we have a bearish structure in the lower time frame. So how do we, how do these time frames, like both time frames, how they both trend work in hand with each other? So I'll be breaking everything down for you guys in this video, so you guys will know exactly what we call internal, external structure, internal structure, external structure, and basically everything about advanced market structure. So you guys can see here in my screen, I have an example of a bullish market structure. As you guys can see, we have a high right here. Sorry, we had a low right here. We had a high. We had a low. We had a high. So the market broke structure right here by taking out this high. Market retreats back again. Broke structure again. Retrace back again. Create another high and break structure. So just like that. So now let's say this is the daily time frame, right? This is a daily time frame 1 day. So on Euro USD, as you guys can see, let's say this is the daily time frame. So now let me go straight to the 45 minutes time frame and see exactly how these things are moving lower time frame. All right. So now here's another drawing here on my screen that I have, and we're going to take this as maybe like the 45 minutes time frame. So now you guys can see how crazy the moves are in the lower time frame, right? It's not really straightforward as you guys can see it in the daily. So what really happened? Let's break it down. So you guys can see that we really have just a whole move, a whole straight move right here. It's very much straight in with the candlesticks, as you guys can see. But here in the 45 minutes time frame, you guys can see that we have a high, low, high, low, high, low. So what is market doing in lower time frame? Why is it really like this? Why is it not straightforward as it is in the lower time frame? Right, sorry, as it is in the higher time frame. You guys can see that in the lower time frame, market structure speaks more louder because you guys can see how the structure is being printed, very much straightforward and simple. But actually, all these things are actually following the higher time frame, but then it's just range. It's just giving more information about the trend in lower time frame, just for entries, for take profits, just for the market to explain more about what it's about to do. All right, you guys can see that we have a high right here. We had a low. You had a low right here. We had a high. We had another low, we had another high, we had another low, we had another high, we had another low right here, we had another high, another low, another high. So you guys can see that this market structure right here is bullish. Right, market is actually going bullish. But here it's actually giving us a nice market structure, a nice structural legs, right? But then here is just like a one single move, right? It's very much straightforward with no much information about the trend. But in the lower time frame, market gives us a very nice example or a very nice explanation on how the trend is going, right? So that's basically the importance of using lower time frames. Okay, so you guys can see that we have a very nice bullish structure right here, and we have structural changes. So these structural changes are just for induce for are just for retracements in the higher time frame. Because as you guys can see, we have a nice bullish move right here. Then we have a retracement. This is actually a bearish move before we had another bullish move. So this retracement right here is basically what happened here, right? And I'll break it down for you guys. I'll break it down. I'll break it down. So what really happened there was just the market to go back down to mitigate a very nice demand zone. Like, I mean, a demand zone that's sponsoring the market to the upside. All right. So you guys can see that market is pretty much bullish right at this point. Come on, let me use this. Where is this stuff? Okay. So you guys can see that all the market's movement right here is bullish, right? But here the market turned bearish, right? Because market take out this low. Why does the market take out this low? Just for the retracement. So if you guys see anything like this in a lot of time, you guys should know that it's just a normal change of character. The market is still very much bearish. The market is still very much bullish, right? Because the higher time structure is bullish. You guys should be carried away with this internal change of character. So what do we use the internal change of character for? We just use it for the market. Just use heat just to give us a retracement back to a demand zone that will likely push it back up, or just for it to continue its main structure. Vice versa for the bearish market structure, as you guys can see. So we had a bearish change of character right here, right? Because market is giving us a nice bullish move before market take out this low, Right. So market taking out this low, we had a change of character. And if you guys watch the last video I made about market structures, you guys should know difference between break of structures and change of characters. Right. If you haven't watched that video, I'll encourage you, or just urge you to go do that right now. Right. So we had a nice change of character right there. We had a nice bearish change of character right here when market take out this low, indicating a bearish, a bearish market. Right, like market is turning from bullish to bearish. Right, so right here, even before market take out the low, right, guys can see the market left the high behind right here. The market left this high behind. So this high serves as an inducement, right? I will talk about inducement probably in the next video. So in the next set of videos, I'll talk about inducement and what do we use inducements for. So you guys can see that market give us a very nice reaction right here, even before we're expecting the demand, right? Before this expecting the demand, so the market give us a reaction right here, like it's buying, just as it has been doing before. Market give us a very nice retracement, but then later just expect the supply zone, which simply, later just expect the demand zone and or take out this low rather, which simply means a bearish market structure. So now in the higher time frame or in the lower time frame, okay, let me say in the higher time frame, we had a very nice pot of interest somewhere around here where we are expecting market to mitigate and go back up as it has been doing, right? We have a nice because nice spot of interest right here, probably like the demand zone, right? So we will mark out the higher time frame pot of interest, right? We mark it out probably like this, mark it out like this. Okay, so now we will just expect the market, or we just wait for the market to come mitigate it, right? But then we should just put it in mind that the market is not going to turn bearish just because of this internal change of character. Bear it in mind that this internal change of character is just for a retracement for the market to go or to mitigate its normal point of interest where it is being expected to mitigate before it goes or continue its normal trend. All right. So you guys can see that after market take out this imbalance, market mitigate one internal structural supply zone right here, then sells all the way down to the supply zone by taking out this low two as an inducement for the buys. You guys can see take out this low as an inducement for the buys, mitigate the demand zone right here, and then give us a nice push to the upside. So another push to the upside in the higher time frame. This, as you guys can see here, is basically another one leg push, right? One leg push. But then in lower time frame, it gives us another information about the structural change or the structure continuation, which is actually some structures or some information about the structure which is being built just like this, as you guys can see, like how I drew it in my screen. So right, we had a high, we had another block of structure, we had another block of structure. You guys can see that here is where the market take out the high, right? Here is where the market take out the previous high, but then still continue going higher, which give us a retracement and then go higher again. Then we have another internal change of character, just again, right? We have another internal change of character again, right there. Then we have another block of structure after the market retreats back to the upside a little bit. We have another block of structure to the downside giving us another low right here, then you can see that the market actually go back again, mitigate the supply zone again, take out this recent high as the inducement when we have a lot of imbalances at this point, then market mitigated the supply zone again, then give us another mitigation to the higher time frame demand zone, which will be somewhere around here. All right, you can see exactly how the market moves, which is very, very more simple and straightforward. But then it's really kind of complicated if you are very new to market structure or if you're a newbie trader, stuff like that. Okay. Yeah, let's just continue, right? So you can see after the mitigation, market give us some sort of bullish move again. Then, creating a bullish structure, take out this high right here. After the market take out this high, market give us another internal trend change again. This is actually an internal change of character. After that, the market break structure, take out inducements, mitigate supply zone, and then mitigate the demand zone, the hard time frame demand zone. So after that, market give us a realignment. What do I call a realignment? Realignment is just a process where the market change where internal structure change to external structure. Right, you guys can see that the internal structure is very much bearish here at this point, while the overall structure is bullish. Right, you guys can see that the market structure here turns bullish exactly at this point. Right, it's actually at this point because you can see we had a low, we had a lower high, a lower low, then we had an higher high, which caused an internal structural change. Right, so the market traces back to the demand zone that caused the change of character, and then it gave us a very nice move to the upside which is this moves right here, right? So the market created another high right here by collecting this high. That simply means a break of structure, right? Created the last high, could trace again, then collect this high again. That means another break of structure, right? This is another break of structure, right? So indicating markets now turning bullish with internal trend. So the market take out this last low being created as the inducement to mitigate the very nice demand zone right here before the overall bullish to the upside. So after the mitigation of this chalk, the market created another change of character again, because we can still call this one a break of structure to the downside, then a change of character to the upside, then market trades back to the demand zone that caused the change of character. All right. So after the mitigation of this last demand zone, markets created an higher high in the higher time frame by taking out the recent high the markets created, which is this one, right? You guys can see that we have a major break of structure at that spot. So after that, the market created an internal structural change again. As you guys can see, all this one right here, you guys can see we had a high, we had a low, we had a high, we had a low. So this low is lower than this low, so that's basically a lower low, which simply means or indicates a bearish change of structure, and market traces back to the supply zone that caused a change of structure. Then we had a break of structure to the downside, right? So we had a change of character after the mitigation of this demand zone, we had a change of character right here by the market. For the market to take out this high, we had a change of character. Market trace back to the demand zone. That's caused a change of character, then give us very nice bullish move to the upside. So now we have this last low right here. We have this last low right here. We had another high right here. So a lot of newbie traders, maybe you watching this video, might think that for the market to take out this low, it's basically another structural change. There are some things we call liquidity in the market, whereby the market will grab before going to this normal direction. So I think I'll talk about liquidity in next videos to come, probably next few weeks. I'll talk about liquidity, and you guys will know or understand what we really mean by liquidities, inducements, imbalances, and all. So, right, you guys can see how the market is going. Like, you guys can see how the lower time frame do explain the higher time frame structures, right? So now let's go straight to the real chart. Let me show you guys what I'm talking about. So we're going to be using NASDAQ as an example for this one. Let's go check NASDAQ because NASDAQ is a very nice pair when we're talking about structures. So now let's break down NASDAQ. You guys can see in the 4 hour time frame on NASDAQ, you guys can see the NASDAQ USD is very, very much bearish. Right. So we add our change of character right here. As you guys can see, this is where the market starts to turn bearish. We had our change of character right there. After that, we had this nice beautiful structure to the downside. It's actually a nice BOS. Then we had another BOS at this spot right here. We had another BOS. Then we had this as our last load that the market is, that the market is printing right now. The last load the market has right there, right now. So as you guys can see that we had a very nice bearish leg at this point. How does the market turn from bullish to bearish? Here at this point, all the narrative will be shown, all the information will be shown in lower time frame. So let's go to lower time frame, 5 minutes time frame. Let's see exactly what the market does, and let me break down the structure or the structural information for you. All right, so you guys can see. All right, let me just start from here. Let me just start from the recent highs. All right, let me start from the recent highs, which is actually around here. You guys can see that we had a high, we had a low, 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 we had a high, we had a minor low, we had a high, we had a low, we had a high, then we had a low right here. So at this point right here, you guys can see that this low right here, take out this first low, take out the second low, indicating a nice international of character, right? Because on a normal day, the market is supposed to respect the demand zones and keep going up. But here in this scenario, the market take out this low and then create a nice significant low. So after the market create out this low, the market create a great high and high, created another low, created another high by taking out this high. So you guys should know that that's basically inducement, right? Market is going to mitigate probably supply or demand zone. But in this scenario, we are bearish, so the market will definitely expect or mitigate its supply zone. So you guys should be aware of where this zone is, right? You guys don't really know what supply and demand zone is right now, but then I'll try my best to teach you guys that in the coming videos. So you guys should be very, very much patient, right? So you guys can see that you should make sure you have a nice point of interest in it. You should have your point of interest. So anything the market is doing before the mitigation of a point of interest shouldn't be your concern, because it's very much a probability that it's going to be an inducement, right? So you trading without the mitigation of point of interest is a very much risky stuff, right? Or a risky decision for you to do. So right now, you guys can see that we had another internal change again. Why? What do I mean by internal change? Right, you guys can see that after the market turned bearish at this spot, right, market will continue bearish. Okay, the market will continue going bearish. But then we had a low right here, we had a high, then we had another low, indicating the bearishness. So on a normal day, right, the market is supposed to mitigate another a high right here, then continue going lower, but then created another high again, creating another internal change of character right here. So this internal change of character right here will only push price to the selling point of interest that you have here, normal, because on your normal stuff, we have a nice internal change of character, indicating that the market is now ready for a retracement, probably to the demand zone, or yeah, just to the demand zone that's controlling the market, or to the supply zone that's controlling the market. So you guys can see that we have another internal change of character right here, indicating a little bullish move. Right, guys can see after the change of character, the market mitigated a demand zone right here, then created another high, created a low, then created another high. So after the mitigation, you guys can see that the market mitigated the supply zone or the point of interest right at this point right here, right at that point. So after the mitigation, you guys can see how the market's turned from bullish to bearish. All right. So let's break down how the market behave at the mitigation right here. So you can see we had a high, we had yeah, sorry, sorry about that. You guys can see that we had a low, we had a high, we had a low, we had a high, we had a low, a high, a low, a high, a low. This very much like the market is ranging, because doesn't really take out this high. So we had a significant low. So this low right now break out this low. So that means a nice change of character to the downside. So this change of character is what we call realignment, because the overall structure is bearish. Then we have an internal change of character that's indicating a bearish market movement. So this is what we call realignment, because the lower time frame market is now realigning to the higher time frame market, which simply means a nice trend continuation. Okay, so after the change of character right here, you guys can see how the market retraces back, indicate or retraces back to the demand to the supply zone right here, following this normal internal change of character right here before the viral sell to the downside. So after the viral sell to the downside, the market will continue until it takes out the external put of interest, the external high or low. Right, guys can see this is where the market stop being selling, market stop selling in this structure, and here's the last of market created. So this is a change of character. So now you guys can see that even after this change of character right here, even after this variation of character right here, you can see that the market continue going bearish. It's actually low, high, low, high, low, high, low, high, lower low, lower high, lower low, lower. So you guys can see how the market structure is actually presenting themselves. But then if you go to lower higher time frame, like the daily time frame, you see that this movement is just like five candles. You won't really see the information behind this the movement. You won't really see the psychology or the movement behind the price in lower time frame. Right. So same thing applied to this one right here. So you guys can see that after the market created this significant change of character, the market will need to mitigate a supply zone that sponsor the change of character. And I think this is that's around here. Okay, that's basically somewhere around here. So let's see how the market behaved before it reaches this point. So you guys can see that this structure right here is very much still bearish. Okay, that structure right there is very much still bearish. Then we can see that we had a low, we had a high, we had a low, then we had a high. So this high now is higher than this high. So that means another internal change of character, indicating a retracement phase, right? Indicating a retracement phase, because the overall structure is bearish while the internal structure is turning bullish. So the internal structure should be the one to give a retracement for the external structure for it to continue going bearish or its normal direction, vice versa for being bearish or being bullish. Okay, so you guys can see that we had a nice internal change of character right here. Then market retraced back a little bit, created another high, retraced, created another high, retraced, created a very significant high right here, then retraced. So this one right here, I did call them liquidities, because market was still very much bullish, right? So market take out the liquidities and then continue going bullish. All right. So now let's identify or let's break down this internal structure before the change of character. So we have this one as the low, this one as the high, this one as the low, this one as the high. So we had a nice change of character right here. Why? Because this low right here, it's more lower than this low, which simply cause. Okay, I think here is where the change of character really happened. Okay. Here's where the change of character really happened. Here. Sorry about that. Here. So you guys can see that we had a low, we had a high, we had a low, we had a high, we had a low, then we had a high. So after the market mitigated the higher time frame point of interest, which is actually from the daily time frame, market created a low. So this low collects this low and collects this low. So very much lower than two of the lows that market has created before, which simply means a change of character. So this change of character simply means a realignment too, because the market is actually realigning to its overall trend, even in the current trend, right? Because we can call this one the current trend. The lower time frame is what we call the current trend because that's what the market is doing presently, and the overall trend is what we call is the higher time frame trend because that's just the overall direction of the market, right? Because market might just be giving a retracement in lower time frame whereby the market will still respect the overall direction in the higher time frame. Okay, so you guys can see that after the change of character right here, the market give us a high right here, give us another low right here, giving making it a nice bigger structure. Now giving us a very bearish confirmation. Then you guys can see the market later take out this high right here. So it gives this high, takes this high as an inducement, then to get a nice supply zone right here before the viral sell to the downside. So you guys can see how the sell continues. Okay, you guys can see how the sell continues, right? We had a low, high, low, then we had another significant high right here. So I think you guys just go to your chart and backtest this. It's very much complicated, right? Internal and external structures is very much complicated when we're talking about to how to use both of them with each other, right? So a lot of maybe we really get confused about this course, I mean about this video. But then if you go to your charts and really practice how this works, you definitely understand what I mean by internal and external change of character. Because internal change of character works in alignment, works for the external change of character, but it's in most cases, right? In most cases, there's a lot of noise in the internal time frame, which might cause confusion for someone who don't really know about forex or who don't really know about SMC or even market structure before. So I think this is where we're stopping for today, and I urge you guys just go to your chart and really practice about internal and external change of structure, market structures, and how they work in hand with each others. So if this video helped in a way or the other, consider subscribing to my channel, like my video, and comment down below the kind of content you want me to do next. And right, I remain Midirishi, and see you in the next one, guys. Peace.